Hey, what's up, guys? It's your boy Easy, and I'm back with another video. In this video, I just want to cover all the trades we did this week. I'll try to go as fast as I can, not to make this video too long. And also, on my next video, which I'll be posting Sunday, it will come with fundamentals and also answering some of the questions that you guys asked on private chat, and also some analysis that you guys sent in. I'm gonna go over them and do some comparisons between my setups and you guys setup. So let's start the video. So first off, we will start with all the trades that we took from May. So if we scroll all the way down, some around here. So May from, let's say, May, beginning of May, all the way up. So all these trades that we took, already open it up for you guys up there so we can save time. So let's start US JPY. Also, I'll go over them pretty quickly because you guys are used to the setups and how to kind of read the instructions. So I'm not gonna go over those. Just basically the chart and the entry points and stuff like that. Okay. So first off, we have US JPY. Pretty simple setup. We have the break of an IPO, and then right now we just the instruction says to wait for the market to retest the IPO and then sell to close the imbalance. A pretty simple instruction. I've been having some people, new members from this platform and the other platform asking how to enter these trades. I mean, it's pretty simple, guys. There's two ways to do it. You could use it by alarm, or you could use sell limit. After reading the instructions, you guys know that I'm looking to sell below the IPO. You guys know that I'm looking for a retest, break and retest method. So just place a sell limit inside the green zone, and wait. That's it. Or you could put an alert on some alert triggers. You go ahead and do it manually. Okay. I mean, it's pretty straightforward, guys. And let's see the outcome. If you go to the next slide, you can see that this is the entry. If you take a look on the next slide, I mean, there you go. We had over 300 pips here. There's no need to comment on this setup. It's pretty straightforward. The market did not do anything but what I was expecting it to do. Came back, retest the IPO once again, and last pushed it upside, clearing the imbalance, and then dropped. I mean, clearing the contraction and dropping to clear the imbalance, and we caught the entire move. Next up, we have US JPY. I sent it to update on this specific trade. So basically, this is the second one. The other one has the instruction, but basically what I said is sell on the green zone. If it breaks above, you abort. If it maintains below the zone, just keep selling and basically enter on the green zone and sell to close the imbalance. Pretty simple again. Same concept that we use on the other one. Okay, so go back here, open. We had another 180 pips. So from 300 to another 180 pips. Let's see next up. We have US CAD. This is a swing trade. That's why I sent you guys on a daily time frame. I know a lot of you guys are not used to these type of trades. You guys are used to the 15 minutes, 1 minute trades, just like the scalpers or whatever they call it. They use a small time frame. In this case, you don't want to be looking at a small time frame at all. You just want to focus on the break of the IPO and use that same level to sell, as long as the market maintains below their pivot point. Pretty simple, pretty straightforward. Like I said, it's a swing trade, so we're looking for 100 pips plus, and it's pretty simple, right? You just place a sell limit, leave an alert there, and enjoy the ride, right? So for US CAD, use the one day time frame, 1 day IPO zone as a reference to either sell or buy. Currently, the market is below the zone. On a 4-hour time frame, it's possible to enter the blue zone for a sell and abort if the market breaks above. First TP, close the imbalance. Second TP depends on the market, depends if on the market breaking the trend line. Basically, if the market breaks the trend line, we aim to clear the next imbalance. Again, pretty straightforward. There you go. This is the entry point. We wait to see the market if it's this candle hasn't closed. It closes in 13 hours, right? So we have to wait to see how that candle closes to determine if we going to sell this, right? So give it time, and then you can see that the market came back up with the retest in the small time frame. This is just a 1 hour IPO. It closed that on the time that the market reached that top, and then it came back below it. So we when we have these type of patterns, the engulfing pattern right after each other, you cancel them, right? If you ignore this, you can see that the market did not close below that level anymore. So you enter after seeing this this closing. I mean, this closing below the zone again. So you use the same zone to sell, and there you go. Pretty simple, pretty straightforward. Next step, we have US CHF. Again, pretty straightforward. We have the first test, wait for the break. If it breaks below, we go, we use the same zone to sell all the way to clear the imbalance. And then we made over 140 pips on this trade. Market breaking below, retesting on the same candle, and then continue to the downside. I entered as soon as the market broke it, and then we had 140 pips to close the imbalance. Next up, we have a US AUD. Again, another straightforward trade. We have a daily IPO. We have the first test coming back for the second test. What we're looking for here is to see the market breaking below using the same level to close the imbalance to the downside. Again, straightforward. You have here broke below, retest, and then continue to the downside to close the imbalance. Again, this is a swing trade. That's why you have it on the daily time frame. Okay. Next up, we have AUD USD. Simple setup. If the market breaks above, again, pay attention on the instructions. I gave you guys two different scenarios, and it played out exactly how we predicted it. So basically, a simple setup. If the market breaks above the green zone, this is the green zone. Take it for a ride to close the imbalance. That's the imbalance, or at least to clear the contraction. So we have the contraction here. You have the line of the contraction as reference, so we can see that that's the what we're trying to reach. Although if the market respects the zone, it respects this green zone by reversing to the downside, also closing below the trend line. So if it respects the green zone, and if it rejects the trend line, then we can sell all the way down. It's guaranteed. But if it respects the trend line and then breaks through, we use the same green zone to buy and follow the instruction. Okay. But the only reason for the market to break below the trend line is if and only if DXY was rising at the time, which it didn't. That's why I just put it here. It's a less likely, but it's possible, just so you guys understand the risks. But you already you guys know the intentions here is to look to buy and to continue to the upside. So if you go to the next slide, you can see that the market respects the green zone just like we predicted, came back, retested the trend line again. We was expecting that, and this is the determined factor of the direction. If the market would have broke below, we would have took it all the way down, which from here to here it's already 140 pips. Okay. So pay attention. It might look small because remember, this is a 4-hour time frame. It might look small, right? But it's not. Okay, it's not. It's 140 pips. You could have taken half is 50 right here, would have been perfect. But that's not direction. The market respected, broke above. So again, you go and read the instruction. If the market breaks above the green zone, take it for a ride to closing imbalance. The market broke above. Let me just leave it at that. Okay. So next up, we have CAD JPY. CAD JPY is a pretty simple setup. We had this is from a daily time frame. Basically, if the market breaks below, use the same zone to close the imbalance. Okay, use the most recent 1-day IPO as reference. If the market breaks below the pivot point, 1 day, sell to close the imbalance. If you go here, the market broke below, retested, broke below, and then closed the imbalance. Closed the imbalance, literally. That's the TP right there, and then we closed it for 140 pips again. Okay, next up we have US JPY. Same method. Okay, same method. We have a break and retest using wick and body of a last candle down before the up move, broke above, and we can see that we can see the proof of concept here. The market broke below, and then if the market respects the green zone, we sell to the bottom of the trend line. You can read what's in here. This is a very crucial zone. If the market remains below the 4-hour IPO, If the market remains below this green zone right here, it will continue to fall until the bottom of the trend line. But if it breaks above, it'll retest the same level and continue to the upside. Again, that really depends on the US dollar rising or dropping. We was expecting it to drop. So that's why I explained it here. Depending on what happened now, it will determine the direction. So personally, I want to sell using this same zone to sell as the entry point. Okay, so using the green zone as my entry point since DXY is weak. But at the same time, it's currently oversold. So we've been selling the dollar for a long period of time. So sometimes you can see you can expect a pullback from US dollar, but that's just a temporary short period for a short period of time. So that means if the market respects the current zone, sell for 50 and 60 for 50 or 60 pips. And if it breaks above, wait for the retest and continue buying to clear the imbalance. I'll keep you guys updated on my position if it breaks above. So I've already told you guys I'm selling using this green zone, and I'm also looking to grab 50 to 60 pips. And my only worry if the market breaks above, and then I'll just abort my sell and then look for a buy using the same zone. Okay, and if I was to buy, I would let you guys know, but that's not the case. The market respected the zone, and we basically made over 130 pips. And the reason why I made 140 pips because I didn't close my trade on a 50 pips. I was looking to capitalizing on the entirety of the trade. And as you can see, all the way to the bottom of the trend line. And I think I mentioned in here pips. And if it breaks, did I mention it? I didn't mention to go to the trend line, but again, 50, 60 pips should be enough for a trade like that. Okay. Next up, we have GBP CAD. For GBP CAD, it was a pretty simple trade again. Simple setup. If the market holds above the current zone, buy for 50, 60 pip using trailing stop loss. I enter using the same zone. So I entered on the green zone looking to buy. And as long as the market maintains above that green zone, I will hold my buy. And if you check the next, slide, you can see that the market did not close below the zone at any point, and then we reached the zone that we had here. So you can see the zone around 1.62. That's where the market reached for our TP for 102 or 105 pips or so. Even though we were aiming for what? We were aiming for 56 pips, but as you guys know, we go all we take whatever we can get. So next up, we have our last trade. I sent you guys yesterday. Pretty simple. Using the same zone to sell. Looking to sell using the break and retest method on the green zone. We have a comment. I fixed it. It's a break and retest. I meant to say break and retest. Okay. But yeah, on the green zone, again, simple instruction. As long as the market remains below the zone, sell for 50 pips. And for those who can hold it until it closes in balance, of course, not guaranteed, but it's a risk and reward, right? But again, I only mentioned this because it's Friday. Otherwise, if this signal was sent Tuesday, I wouldn't even tell you guys to hold it until closing balance. It's automatically to closing balance. But since it's gonna be the trade will be open over the week, a lot of people I don't know if you guys can hold, so I just put that there to let you guys know. But the goal is to close in balance, which I still have a position opened for Euro GBP. I closed half once we reach here, and the other one is holding to closing balance. As you can see here, no drawdown whatsoever. Market touched there and reversed. Pretty simple. Again, this is a 2-hour time frame here. Here is about 48 pips, almost 50 pips. About 48 pips. My entry, as you can see, guys, on the zone, and then the market reversed all the way down. And I still have this one position open. We'll see what happens. Okay. That's pretty much it. We caught a lot of pips. We did not lose any trade in particular. CAD JPY was the one that kind of had this fake out. If you look at from not CAD actually, US CAD had this one fake out. if you look at here, we had this one fake out, but as you can see, it still remains inside the trend line. So it's basically a retest, but again, still respects the the IPO after the fake out. So once I realized the fake out was there, I did not close my trade. I waited to see if this would be a reversal. So we had that, and that's the only problem that we had. Not problem, but the unpredictable, let's say, move that we had was only on US CAD, but other than that, was pretty solid. Okay. And that's pretty much all the trades we took. I took a couple of more trades on my personal account. The more risky, the ones that it was more like I just saw it and it was at the time of my entry and it was too late for you guys to enter. So I went ahead and entered myself, but it was like one or two at least at most. So yeah. I also want to show you guys one of my clients' account. Basically, what we have here is his account. We have over what 86 winning percentage out of 29 trades, over 27 lots. As you can see, the number of trades and number of lots is lower because I'm super consistent with my lot size. I do not exceed a standard. There's no need, right? We don't need a lot of lots if you're catching a lot of pips. You only need a big lot size if you're a scalper or you're a gambler, to be honest, because once you drop big lots, it means you don't catch enough pips. If you don't catch enough pips, you have to risk more, and if one trade goes wrong, it will just take every single trade, every single game that you had. So try to be consistent, try to understand that pips, if you're catching pips, you don't need to go crazy with the lots. I also want to show you guys the amount of pips I catch personally. So I catch over 100, 100, 100, 100, 98, 92. This is pips, right? So we have over average of at least 50 pips for each trade. Of course, there's some other trades that I closed with 25, for example, but as you can see, it was just solid pips, right? And look at the lots. This is the line of the lots. It's just standards, right? You can see a 0.84, you can see a 0.5, but you'll never see a bigger than that. So we had a couple of losses here. This is US oil. I did not want it to close it, but we had a price slippage, so they closed my trade. And also we had here a loss on US CAD and CAD JPY. But this is not particularly a loss. It was just my stop loss misplaced. So it ended up triggering 275. I had my stop loss at 350 because I knew the market probably wouldn't go above that, and it did not go. But I did not place them right, but it's all good. It was the first trade, anyways. This is my first trade. So yeah, that's what it is. So that's pretty much it, guys. I just wanted to cover that, and then if you guys have any other questions, make sure to send it through with the ones that you already have in. I will probably knock them out by Sunday with the fundamentals. But today, just enjoy the trades that we took, and I'll see you guys on the next video. It's your boy Easy, and I'm out.